Guys, overall, record highs across the board in the 10-year now, 126. Let's get to Bob Pisani. Hey, Bob.
Happy Tuesday, everybody. Good to see you. 3-1 advancing to declining stocks. About 200 new highs on the NYSE. I'm waiting for that to expand a little bit. It's been a fairly small group, though. Look at the sectors. This is the reflation trade. When you get energy stocks move up, you get bank stocks move up, you get the Russell 2000 move up. And the star of the year, semiconductor stocks. There's your reflation trade overall. But as I said, the new high list is fairly small. One consistent subsector on that is semiconductors all throughout the year, every day. Microsoft, Teradyne, Applied Materials, Broadcom, Micron. You can just keep going on down. Texas Instruments again today, right down the list. There's your most consistent group of new high subsectors. But we're also seeing small groups of bank stocks. Believe it or not, bank stocks, the laggard of 2020, hitting new highs. JP Morgan is one of the few big large cap ones, but PNC is there. Goldman Sachs is also there. Regions Financials. There's a smattering of below the radar big regional banks besides PNC and Regions, which are super regionals, I call them, that are hitting new highs as well. So keep an eye on that. Banks moving up. Small groups of mega caps hitting new highs. Google's been doing this fairly consistently. Alphabet, I should say. Microsoft as well. PayPal's been hitting new highs as well. But it's a fairly small group in the mega cap group. So remember the big three themes that are moving the markets, because they're all firing on all cylinders, all three of them. The rollout is accelerating now in the vaccine. That's the most important thing. The stimulus is go big, is winning. It's going to be 1.5 to 1.9 trillion, somewhere around that. It's not going to be below a trillion. That's what the market believes. And the earnings 2021 numbers are accelerating, and it's not the Q4 numbers. They were good, but the market doesn't move on the Q4 numbers, even beating. It's the 2021 estimates that have been moving up. Over the weekend, Goldman increased their estimates, and they're a real thought leader here. They upped their numbers to 2% to $181 for the full year for the S&P. Now, the consensus now is 173. It was 165 just a few months ago. So here's the most important thing. You can see the numbers keep going up and up for 2021 because everyone's realized the analysts have been underestimating the extent of the economic recovery. So the consensus PE right now is 22.7. That's an awfully big number, but the Goldman numbers brings it down into the 21 level. So you can see already the numbers are starting to come down and the multiple pressure may be declining a little bit. Obviously, everyone's concerned about inflation, although the Fed does not seem to be so concerned. Bullard on this morning, not too concerned about that. We got oil at a 13-month high. We've got copper at a 9-year high. We've got lumber at record highs. And of course, we've seen that yield curve steepening. All of those are issues that the market wants to believe are, but is not affecting the stock market right now, maybe somewhere down the road. What's really amazing is just what we have been seeing in terms of records. We have hit 10 record highs in 2021. And my thanks to my old buddy, Sam Stovall at CFRA, for pointing this out to us here. But this has only happened 11 times since 1929. The S&P has hit 10 all-time highs in the first 2 months of the year, and the future is very good. In the past, at least, the S&P is up 10 of the 11 times that it's hit new record highs with an average gain of about 16%. So the past is not necessarily indicative of the future. There is a principle of investing to go on, but it certainly is a very good sign that with a start like this, historically, the full years have tended to be on the upside.
Shepard Smith here. Thanks for watching CNBC on YouTube.